What's up, everyone? This is Silver Slayer. I'm really excited about this video. There's tons of stuff we're going to break down, some very important, critical information that we got to get out. First and foremost, make sure you're subscribed. I do lots of giveaways. I'm about to do another giveaway once I hit 37,000 subscribers. I'm going to do another one at 38,000, another one at 39,000, and then at 40,000 subscribers, I'm going to give away over $1,000 worth of silver. So you better be subscribed. I also post daily videos if that first thing wasn't a good enough incentive. But first and foremost, we're talking about the LBMA saying that silver will be the top performer in 2021. And if you didn't know, silver was the number one performing asset in 2020. And that's a fact. Silver was the number one asset of 2020, but nobody's talking about that. You're only going to hear that type of information from precious metals sources. Nobody else wants to admit it. They're going to sweep silver especially under the rug. I mean, even compared to gold, silver is by far called the devil's metal. It's the rebellious metal. It's the riskier version of gold. I like to call it gold on steroids because it's very, very dramatic compared to gold's price fluctuation, but there's also more opportunity there. So regardless, we got this article we're going to break down. We also have another article talking about Goldman Sachs sees silver price rising to $33 an ounce. Reddit squeeze was doomed to fail. It was doomed to fail. Set up. I mean, if you think about it in the grand scheme of things, I don't see how it could have squeezed to $1,000 just by going up. That's not possible. It has to be a gradual approach, especially with something like precious metals. So we really, that just could have been the spark to light the fuse, and especially with everything going on, further with the stimulus that's about to get released, with all the other things that silver has been boiling up. Aside from gold, this could just be the beginning, and I definitely think it is. Now, the London Bullion Market Association, the LBMA, has identified silver as the top performer among metals this year, considering that the commodity has garnered increased attention from investors over the past few days. The precious metal was up 20% in just 3 days before correcting lower with the social media squeeze. Global Metal Markets New Agency Metals Daily CEO Ross Norman said during the LBMA webinar on February 4th. A lot of the driving force behind silver has been the investment demand, while for the bulk of 2020, a big increase over 8,000 tons was seen in silver exchange traded funds, ETFs, for the full year. Now, there's definitely an adjustment happening. There's definitely a new wave of investors, a new wave of money, and that's also going to affect silver a lot more dramatically than gold, since silver is a much smaller market. This momentum has continued into January 2021, commented Standard Chartered Precious Metals Research Executive Director Suki Cooper, who noted that there had also been a continued buildup in retail interest. It's been that surge in retail interest. It's really driven silver prices. So much so that we saw silver prices testing an 8-year high on February 1st. And it's still up around that high, ladies and gentlemen. I mean, we're not talking about too big of a difference between $30 and mid-27. Now, moving forwards, like this next article, if silver breaks above that $30 resistance and hits 33, we're going to see prices going from 35, 36, and then they're probably going to correct back down to 34. But regardless, we're heading towards that $50 range, which is silver's all-time high. And I always compare this to like a volcano. Gold is like a volcano that's already erupted, so it's lost its pull. It's lost that phase of really exploding. It's kind of the after effect, the aftershock. Silver hasn't erupted yet. So when it does, and it will, it's not if but when it does, it could be astronomical, even compared to gold, since silver is a more extreme version of gold. So, if anyone's talking about the Reddit thing is over and silver is just back down, that's so far from the truth. So if you look at, or actually let's move up here real quick. So However, HSBC Chief Precious Metals Analyst James Steele said silver attracted a wider audience, partly because it was more cost effective than gold, and partly because people understand silver better. And that is somewhat true. I mean, look at even the silver stacking community. There is a much bigger silver stacking community on YouTube than there is a gold one. I mean, do you know any YouTube channels named like, Gold Guy, or I'm sure there is, but it seems like silver is definitely a more interested topic. And I think it's because it's more affordable, it's cheaper, and people see the potential more than gold. So if you look at silver's liquidity, it is thinner than gold, but deeper than equities being pushed higher. Also, silver doesn't have the same short positioning equities did. That's why it began its pullback. He elaborated. UBS precious metal strategist Joni Teebs, meanwhile, noted that investors had been friendlier to silver given its industrial properties even before the recent spike. Even though this new interest would likely not immediately translate into higher prices, it was likely to occur in the medium to long term. Everyone focuses on the short term and overanalyzes the short term. The short term is going to be very dramatic, very chaotic, very unstable because the economy's unstable. It's going to be a wild roller coaster ride, and rightfully so. Could you expect any type of normalcy right now with a global pandemic and this vaccine and all this stuff? No, nothing is for sure because everything is still up in the air. Silver, however, does have the potential to outperform gold in an environment where industrial demand was expected to recover. Tebbs noted, adding the social media trend also revealed just how liquid the silver market was. Considering that silver was a well-supplied market with more than a year's worth of inventory, Cooper said some tightness in the near term could be expected if the retail industry started to unload. Now, what do you guys think about the first article? I definitely think they made some good points there, especially when they're talking about the medium to long term and really the reality behind it. A lot of people don't think about context. They just look at what they see with their eyes, the price, what the price is doing, but they're not applying the principles that investing should be or that investors should be doing, right? So Goldman Sachs sees silver prices surging to $33 an ounce, and the Reddit squeeze was doomed to fail. Very interesting stuff. Volatility continues to dominate the silver prices as the market continues to deal with the fallout of fizzled short squeeze after a mob of retail investors jumped into precious metals. Silver prices are seeing a small bounce Wednesday after the market's significant drop Tuesday. The market is still significantly down from Monday's nearly 8-year high. March silver futures last traded at $27 an ounce. So looking through the recent volatile price action, Goldman Sachs analysts in a research report published Tuesday reiterated their bullish forecast for silver. The bank sees prices rising as high as $33 an ounce as U.S. President Joe Biden moves forward with a plan to increase alternative renewable energy production. Also, that translate into more dollars, more excessive spending, more stimulus, more vaccine distribution, and everything is going to translate to a weakening dollar, which in return means higher gold and silver prices. Now, while many retail investors organized through social media and a Reddit post from Wall Street Bets were hoping to create a short squeeze similar to what they accomplished in stocks like GameStop, BlackBerry, AMC, Goldman Sachs said the plan was doomed to fail. While some shorts are speculative and require covering before that, most are driven by industrial producers hedging forward their earnings. When commodity short positions are broadly backed by real physical stock, there will be no subsequent buying and no short squeeze. In an interview with Bloomberg News, Jeffrey Curry, a global head commodities at the investment bank, said that the silver market is worth about $200 billion annually. It is just too big for retail investors to manipulate. But, that's not, it's too big to manipulate, but it doesn't mean that can't lead to a domino effect, especially with something that's already a ticking time bomb waiting to explode like silver. All these new people that hear about silver, that got that plant seeded, that silver has real value, that silver is a real investment, right? That's going to stick. That seed is planted, and this could be a rippling effect in a much bigger picture. To corner the market and create a short squeeze, we estimate would require each one of the Wall Street bet individuals to accumulate positions to around 4,200 ounces. That's a lot of silver, and where are you going to put it? The bank also noted that after the Hunt brothers infamously tried to control the entire silver market in 1980, regulations came now that make it nearly impossible to corner that. And if you don't know, we're talking about that the Hunt brothers cornered the market in the 1980s, and that's when we saw $50 silver for the first time. Then we saw $50 silver in 2011 after a situation that looks very similar to what's happening now. The 2008 credit crisis, financial crisis, billions of dollars in stimulus, recession/depression. Nowadays, we have the financial crisis, global pandemic, $1 trillion stimulus, and a silver shortage. So if we're talking about $50 silver back then, imagine what it could be now. Things are a lot more extreme. If you want to talk about crazy silver prices, well, we're living in crazy times. Now, I thought these two articles were great to break down. They definitely show a lot of context that people look past. I hate when people overlook context. It does matter. A lot of times people read headlines or they just take things, for what they are and don't look or don't explain deeper into it, and it really can be misleading to the reader or to the person that's listening, and that could affect the way you invest, or it will affect the way you invest, and that could be for the negative. So I try to make my videos very open-ended. I try to be transparent so you guys can understand what's really going on and get a better idea on which direction you want to take things, and also a better idea on which direction the markets are headed and what's going to affect them. So anyways, I'm going to wrap this video up. I got some other stuff to work on today, so stay tuned. If you missed my video yesterday, go check that out. I'm talking about a crypto that's backed by gold. It's GSX. It stands for Gold Secured Currency. It's a cryptocurrency backed by physical gold. You can actually exchange the crypto for physical gold. They own gold mines. It's ran by Apollo FinTech, the most revolutionary company on the blockchain. It's incredible. The coin's 10 cents, and within a couple of years, it will definitely be worth $1 plus, so you can 10 times your money. Check out that video. I definitely recommend that. It's something that I'm also going to be diversifying in, kind of branching out my portfolio to make some other longer term gains. But anyways, like I said, the link to these two articles will be in the description. If you want to enter, or if you want a chance to win some free silver, make sure you're subscribed. I'm doing tons of giveaways. If you don't win this one, you might win the next one, or the next one, or the next one. So definitely subscribe. I'm going to wrap this video up here. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.